How many faculties are there? Apart from the organizers, any faculties are there? Can you bring me? Okay, so okay, fine, that's good. Yes, so let us start with my session. The first session that today I am having is a formal this thing about forensic accounting, to have an idea about forensic accounting. And tomorrow's session, I am planning a practical session. So I'll be giving you a spreadsheet for tomorrow's session and how this can be applied in real life. And some of the latest techniques that has evolved over the period of time, I'll help you to do it. So tomorrow's session will be more of you people doing it, and I'll be helping you to do a forensic analysis. So before that, you need to know about forensic accounting, and this session is mainly intended to give you an exposure about forensic accounting and how it is being done, like that. Okay. So practically how to do it, you will learn it in the tomorrow session, and this session is an introduction. Always feel free to talk, interrupt. That's how it works. If I'm only talking at one side and you are sitting silent, that won't work. So unmute your mic quite often and keep disrupting the talk quite often. And I like that. And also put a lot of doubts in your chat boxes. So whatever is known to me, I'll explain it. If anything which is beyond my capacity, I'll address it in the next class. Okay, so that's how it is. So let's start with the forensic accounting. So anybody, any idea about what is forensic accounting? What is your general view about forensic accounting, or how it is different from an audit? Any participants? You can type in chat box, or you can unmute your mic and you can talk. Any idea about forensic accounting and how it is different from an auditing? Anybody? No? Either you don't have any idea, or just stop. Be blunt. This is a new area. Okay. Not getting any messages.
Hello, sir.
Yeah.
I'm audible.
Yeah, you're audible.
Sir, I'm Sanu Francis, a research scholar in the Department of Commerce.
Yeah.
Actually, this question was raised by one of my professor, John Brito, sir, in a previous session, and he has raised it like, is there any difference between forensic accounting and auditing? So from that moment onwards, we have also got this. The exact differences can't spot out, but maybe I would say this is a play of words, because the whole understanding is the same. We are looking at the financial statements and understanding the anomalies in that patterns, changes. Then we are tracing out the reasons for that. I suppose that is the idea behind it.
Okay. So you think it is like that? Okay, then we will see what it is. Let us make it little more clear. Let's have some clarity on it. Now, Warren Buffett, he used to say that I can't afford the operation, but would you accept a small payment to touch up X-rays? You can see in some of the advertisement of Mediclaim policy and all, they say that my policy doesn't cover such and such this thing. So kindly make it a different disease like that. So like that, companies actually touch up their financial statements, like touching up an X-ray. If you're touching up an X-ray, what will happen? Nothing will happen to your body is same. Okay. Only you are hiding the X-ray. In a similar manner, companies are hiding something from investors and other people, all other stakeholders like that. But the problem will remain there. Now, the person who told me that both are same in the sense forensic accounting and auditing, actually both are different. To explain this, I take an analogy here. Suppose you can think of a police patrolling in your area. Okay. So policemen know that normally these are the areas where normally crimes happen based on past experience. He knows that these are the areas where crimes happen like that. And he patrols all these areas like that. Suppose in one area, if he is passing and he sees that the car garage is closed and light is off. Suppose if you are the patrolman, what will be your inference about the house? You are the policeman and you are just passing and you see one house is closed and the garage is also closed where the car is kept and the lights are off. So what will you think about that house? What will be your first inference about the house? Come on, talk. It's not a serious question for you to interact.
Like there is no one right now at the home.
Yeah, you will think that there is nobody at house now. Okay, fine. Now, again, when you are patrolling, you are seeing that the garage is closed and light is on. What do you think? What will you think?
The person is in the house and after work or something like that.
Okay. So normally nobody will tell that the policeman is at a mistake and all, because you saw the house, there is a light and the garage is closed. Okay, somebody is there inside the house like that. And suppose another scenario happens that garage door is open and the light is off. Now what you will think?
The person has gone out for work or gone outside.
Light is off inside like that. You might be thinking person might have gone outside, or sometimes the person is sleeping inside. And if the policeman is coming and knocking your door and telling you that garage door is open, will you be happy about it? Huh? You are sleeping inside the house. Policeman is ringing the bell and telling you that your garage door is open. Will you be happy about it?
No,
No.
he's interrupting.
Okay, so you will be thinking that why this guy is interfering into my personal this thing like that, and you won't sometimes even appreciate that policeman what it is doing like that. Now garage door is open, light is on, car is visible. In that case also you will be thinking that okay, you can have a look into it, all these things. Okay, fine. You may be thinking everything is good like that, or sometimes you may inspect also like that. Now, finally, what happens is that garage door is open, light is on, car is not there, and the crime has happened. Somebody has taken the car and left, and the crime has happened. Now people will say that this policeman was actually not doing his duty, the police patrolling is of no use, all these things like that. Now, at this point of time, when the crime has happened, now comes the detective to check what went wrong. He gathers all the evidences. Okay, he checks for the footprints, all those fingerprints, all those things like that. And he talks with people nearby, house owner, everybody like that. And he is trying to investigate about this crime. This is where a forensic accountant comes. So here, patrolman is who? Who is the patrolman here?
The person who is doing the accounting or auditing work.
He is the auditor here. Okay, he is the auditor here, and the detective is the forensic accountant. So basic difference between forensic accounting and auditing is that auditing is a process for checking all these things like that. But forensic accountant's role comes after the crime has been detected. Okay, so that you have to understand, that is the basic difference between these two professions. So auditing and forensic accounting, like that. So he comes at a later stage. Don't think that both are same in the sense. Once the crime happened, you have to gather evidences now, and you have to interview all these people and find out what went wrong. And finally, you will have to present it in court of law about what went wrong, and you have to even do the litigation process. That is the full role of a forensic accountant. Okay, for that, of course, you need to have a certificate for certified forensic accounting degree also. Okay, so I hope you understood what is the difference between an auditor and a forensic accountant now. Let's move on. This fraud, how it happens. That is something which everybody would like to know. What is the psychology of a fraudster? Okay. What is the psychology of a fraudster? I'll tell you, two types of studies have shown that fraud happens broadly under two categories. Don't think that the fraudster thinks that he's a criminal like that. Okay. So there are two types of people whom we can call it as fraudsters. One is calculating criminals, and other one is situation dependent criminals. First, let me take the first example, that is the case one. It can't be bought. That is one example which forensic accounting classes they used to say. An ideal case, when the case was investigated, there was a manager in a company who was very friendly with others, and he knows every employee's names, everything. He calls by giving their name like that. Everybody, he remembers everybody by their name. Okay, their family members, everything like that. He used to work late hours. He is married, having children. Okay, past 10 years, he is in the company and everybody knows him like that. And suddenly one day, he leaves the organization and a crime has happened. A lot of money has been lost. And he leaves behind his family and the children and all. And he leaves with the secretary. He is missing on a suddenly one day like that. So for the employees of the company, this may be something which never happened. They cannot think of this guy has done some mistake. But as far as a forensic accountant is concerned, he is a criminal. Because that is a typical mindset of a criminal. And these types of crimes are very hard to detect in the sense that because they want to prove themselves, these people do it in a very well planned manner like that. And these types of frauds are very difficult to detect. We call them as calculating criminals like that. They are in the first category. So that is the first case, a mindset of a fraudster, that is calculating criminals. These people are very hard to detect and not so easily detected. But whenever you are investigating something, you should be very clear about these type of people like that. Now, second case, that is situation dependent criminals like that. What are these people? Let's try to understand about these people like that. I have three cases here, which is often studied by forensic accountants like that. For good of the company, he's a manager of the company and he wants to do something good for the company. And he is asking for a lot of rebates from the vendors who supply goods like that. Okay, this is for my company and he is doing very good for the company. And whenever he is making a purchase, he makes sure that company gets it at the lowest cost possible. So he asks for more rebates and all. And he makes sure that the vendors are supplying goods at a very low cost to him. And finally, what happens is that the investigation agencies are finding that the company is getting undue rebates from the vendors and they are charging the company a fine of some 8 million and the CEO is made responsible for it. What is your opinion about such a case? Is he a fraudster? What do you think? Is he a fraudster? You are doing something good for your company. You can either put it in the chat box also, or you can talk. I want you to talk. Is there any problem with such a company, such a guy? Nobody is responding. Is there any problem with such a guy? I'm getting some message.
Yes, sir.
Yeah, what is the problem? He did good for the company. He was getting a lot of rebates from the company. What is the problem? Any problem? You say there is a problem. Can you tell me what mistake did he do? Nothing. Actually, his actions bought company a loss. Okay. So, although he was doing it good for the company, his actions are actually, or his actions resulted in a loss to the company. And that is one reason. He was doing good for the company, but this resulted in an 8 million loss to the company, and it is a fraud to get undue rebates like that. Sometimes what happens is that personal catastrophes can happen. Say, for example, another case is there. A person lost his job. He was in a company for 10, 15 years, whole of his life like that. And suddenly there was a recession like that, and he lost his job. Then he was trying to get a job in another company like that, and he somehow just got into another company. By the time his daughter met with an accident, and she needs surgery, which will take a cosmetic surgery, which will take some amount of money. His wife is pregnant. His mother-in-law is sick, like that. Now, what will he do? He'll naturally end up in a crime like that. So sometimes personal catastrophes can take a person to commit a crime like that. The fourth case is an educated, upstanding citizen. If you look into this case, a CEO is there, and he is working in the company for a quite long time, and this company has been in charity works and all, and suddenly one expenses it is being seen. And if you look into these expenses, these are some of the personal expenses of the CEO, tuition fees of the child, all those things like that. The forensic accounting team digs deep into it, but they are not able to find any such evidences like that. Then again, they look into it, they found that some personal expenses were there like that. Then again, when they went, they couldn't find much about it, and all the funds, charity, all those things, they check it like that. And finally, they found that in some of the charity checks which are being paid, there was some frauds in that, like that. They were paying it, but much a higher amount like that. So that was a very difficult crime to detect. A similar crime has happened very recently now. If you look into the person, the photo is there. Can you identify that person?
So there is Ashwin Grover of BharatPay, co-founder, former co-founder.
Okay. So very recently he is in newspaper. Why?
He is for the same personal expenses, and he resigned from the post when the board of BharatPay called for an immediate board meeting for an internal audit for his actions.
Yes.
And the shareholders agreement has also been triggered that the BharatPay can they can take back his I think about 1.5% of his shares. Okay. As a result.
Now, this is a typical white collar crime. Okay, this is a typical white collar crime. So what happens? He was the founder member of BharatPay. He's a graduate from IIM Ahmedabad. Okay. And he actually developed this BharatPay, founder member of BharatPay. And while looking into some of the personal expenses in this, some of his personal expenses were mingled up with this, and PricewaterhouseCoopers, when they audited, they found some fraud in these transactions. And when they were planning for a scheduled meeting like that, suddenly he was actually exposed. Okay, he was exposed. Now that report has not yet come, but if you look into the background, he typically fits into the fourth criteria, that is an educated, upstanding citizen. Normally, if you look into the background of people committing crime, they are above 30 years normally. Mostly if you take male and female, 55% are male and around 45% are females, like that, roughly. They will have a very stable family and they will be well educated. Okay, they will be well educated. Let me tell you again, less likely to have any criminal record at all. They will be having good psychological health also. They will have trust also. They will have detailed knowledge about the accounting system and their weakness. And they will have prior accounting experience also. These are the typical. If you look into the CEO of Enron, Enron was a famous company in energy sector, which was in scam. like that. If you look into the CFO, not CEO of Enron, that is Chief Accounting Officer of Enron, you can search in YouTube about him. He'll be showing in YouTube two things. One is an award given by the accounting body to him for the best accounting practices. Not best accounting practices, it is named as creative accounting practices. He was given an award for creative accounting practices. Next year, he was in jail. And he is showing his identity card from the jail also. So in one hand, he is holding the trophy, and another one, he is holding the jail identity card, and he is showing that both of them he received for same thing. One side, he received it for creative accounting, and another one he received, that is, he was in jail for the same practice like that. So many a times you don't know whether it is a fraud or not, like that. So this is something which happens with the psychology of a fraudster. So that you have to remember. Some of the typical examples which you see in this is, replies from this is like this. Whenever there is a crime, people try to rationalize it. Okay, let me show you a rationalization. My screen is not moving. Okay. You can see some of the replies given by people. Can somebody read it for me?
So it was a loan and I had every intention of paying it back. See, I kept track of all my loans so that I could pay it all back one day.
Okay, he's taking out the spreadsheet and telling it's nothing but a loan. Okay, like that. Now, second case.
That accounting rule is confusing and subjective. Accounting for the transaction in the manner I choose is entirely acceptable.
Okay, that is Enron's. Okay, Enron's Chief Accounting Officer. That was something which happened with him. Okay.
Third one, my boss has been cheating on his taxes for years. I'm just getting my share.
Okay. So this is not normally we see in many of the public sector undertakings. Everybody is taking, so I am also taking, like that rationalization. Okay.
Everyone in this industry takes kickbacks. I'm sure my employer is aware of it. And that's why they don't pay me very much. They expect me to supplement my income with gifts from our suppliers.
Okay. That is another thing. Next one.
I'm the hardest working employee here, and I know my boss would give me a substantial raise if he could do it without other people knowing.
Okay.
Another one, instead I take a little bit, but I'm actually saving the company money because only I get the raise.
Okay.
Another one, what do you expect me to do? You give me no health insurance coverage and I need to provide for my children and my parents. They depend on me and I can't let them go down. Next one is, there are a lot of good people here. If I didn't make up a few entries to give the appearance to corporate that we were making budgeted income, they would close our division and put 50 people out of work. I did it to save their jobs.
Okay. Whenever a crime happens, people try to rationalize it. Okay. Many people think that it is not a crime. In one of the cases, when he was asked, do you know it is a crime? Crime? That means illegal? it is illegal, but it's not a crime. That's what the person argues like that. Say, for example, one of the famous scams which happened in India, Satyam. During the time of the Satyam scam, the Harvard University professor Krishna Palepo is in the board of Satyam. Okay, he's a very good professor. He's in the board of the Satyam. And he resigned just a few days before this bankruptcy actually happened like that. And he writes some of the best books in accounting. And he talks about that managers do it to survive. Many a times you cannot call it as a fraud because managers knows from the experience that this situation can be reversed like that. So they are making such accounting practices like that. He is of the opinion that. So if you look into his statements, many times he says that not all this shenanigans can be actually considered as a fraud. That is his argument. But view with skepticism like that. So this professor, he says like that, but he was in Satyam board like that. Now, this is what psychology of a fraudster happens. So I have given you 4 cases. Most of them comes in any of these 4 type of cases. That is a broad guideline of how the crimes happen like that, how the psychology of the fraudster happens, and also the rationalization one makes like that. So in one of the books in forensic accounting, it starts with a line, not exactly same wording like that. If you are a knowledgeable person or a well intellect and you have very good knowledge in accounting, you are susceptible to do a crime. That book starts with that one line. Okay. So in that way, don't think that this is happening with people who are not educated, not well off like that. These are the people which, and many a times what happens is that these type of crimes are not punished very severely. A person who is robbed, who has robbed from a house, he will be punished severely, but this white collar jobs were not actually severely punished earlier. In US and all, they passed an act later on, and the punishment has become now severe. But earlier, many of these things were not at all punished like that, because this white collar, and it amounts the money involved is so huge, but it was undetected like that. So the role of forensic accounting, day by day, it is increasing because of these scams which are happening. Okay, so here I am going to deal with the shenanigans of companies. How do you understand whether the company is committing a fraud or like that? And we are looking from an investor's perspective because we don't have an information about the company. We don't have any insider information about the company. So we are looking from an investor's perspective. Remember, we are looking from an investor's perspective since we don't have access to the records of the company. So that's why I'm dealing with financial shenanigans, and I'll tell you how to do it. Practical session in the next tomorrow's class. Today I'll give you some theoretical aspects about it like that. Let's move on. What are financial shenanigans? This means any action which a person is doing, management is doing to mislead the investors about the company's financial performance or economic health. Okay. So this can be done in variety of ways. And as an accounting student, you should be able to detect it. Okay. You should be able to detect this. What are these shenanigans? How it happens like that? So basically, you can classify these shenanigans under 4 heads. That is, you can call it as earnings manipulation shenanigans, cash flow shenanigans, key metrics shenanigans, and acquisition accounting shenanigans. Okay, these are the 4 classifications we have, and most of the shenanigans happens in this thing. I'll talk about earnings manipulation shenanigan, and this will give you an idea about how other shenanigans will happen. And naturally, you will be able to look into other shenanigans also if you are looking into the first one like that. In earnings manipulation shenanigan, the first shenanigan which I am going to discuss is, this much shenanigans are there according to the textbooks. Recording revenue too soon, recording bogus revenue, boosting income using one-time or unsustainable activity, then employing other techniques to hide expenses, shifting current income to a later period, shifting future expenses to earlier. So we are going to learn how to detect these things in a company. Okay, let's take the first one, recording revenue too soon. Now, you all might have, how do you know how many days are there in a month? How do you find out? In school, you have been taught how to find out number of days in a month. What do you do? How did you do? How many days in a month? In January, how many months? February, how many months? How do you decide? It has been taught in your school, isn't it?
Yes, sir.
How it was taught? Don't remember?
By using hand.
They'll give you a hand and you will say January, February, like that.
Yeah.
Okay. Okay. So we were taught by this rhyme in school, that we were taught this rhyme, 30 days in September, April, June and November, all the rest are 31 except February, like that. So we remember. So whenever, even now, that comes automatically in mind, 30 days in September, April, June and November. So even now, that automatically in my mind it comes. And remaining all are 31st except February, like that. We were taught that rhyme. Companies manipulate this rhyme a little bit in a different manner. If you look into that, what they do is they will have more than 31 days in their month. So what is the benefit of having more than 31 days? What will happen? You might have seen this quite often among your neighborhood companies which are doing. That is month end. You will see it during the month of this April. March end, what you will see? If you look into automobile manufacturers, you can see that they will try to push the sales towards this year, like that. So whenever the sale is happening after 31st March, they try to put it into 31st March. Why do they do so? Come on, talk. Why do they do so? Yeah, Beenamol. I can see some of the names. I'll call them.
Show more profit in that year.
More profit in that year. Yes, very simple logic. That means you are putting your expenses to this income to this year, and so that that year sales will be increasing. It should have been in the next year. But so there are 4 techniques which they use to do this. One is recording revenue before completing any obligations under the contract, recording revenue far in excess of work completed on the contract, recording revenue before buyer's final acceptance of the product, and recording revenue when buyer's payment remains uncertain or unnecessary, like that. In the picture, you have Computer Associates CEO who has done this technique, and he was jailed. Okay, he was jailed. And he's an Indian actually, but in a US firm like that. And he was accused of doing this, inflating the revenue at this point of time, like that. So this is something which companies do. Now, what accounting says is that whenever you write something as sales, evidence that there is an arrangement should be there. Then delivery of the product should have occurred. Price should be fixed or determinable, and collectibility has to be ensured. This much things are required actually to do it. Now, companies, what they do is, some of the companies which have done this type of crime is that, I have mentioned those companies in the name: MicroStrategy, Computer Associate, Sunbeam, all this Peregrine, all these companies. So what they will do is, they will write it as sales and it has not been sent. They will send it, but they won't write it as sales, like that. As simple as that. Okay. So there are a lot of Indian companies in my, I wanted to take. So how do you find? Second thing is, far in excess of, you have learned in accounting that how to calculate the notional profit, like that, cash received by work certified, like that, you might have studied in your contract accounting. But what happens is that most of the companies, what they do is, sales that have actually not earned, they put it as sales. Basically, it is based on accrual concept of your accounting. So we assume that it is a sales, like that. Now, how to detect this? You have to closely watch your accounts receivable. If a company's accounts receivable is mounting up, what is your inference about the company? All of you are MCOM people, and you have been studying accounting for a lot of years, like that. Suppose the accounts receivable is increasing. What inference can you make about the company? Snehit Jacob, can you tell me?
When the accounts receivable is increasing, that means that the cash inflow, we can say one inference we can take is the cash inflow out of the sales into the company is reducing. Or we can even say, in case of financial institutions, we can say that like the non-performing assets is increasing.
Anything else? Anybody else has a different idea? Come on, talk. It would be boring if only I talk. Yeah, I see something in chat box. More credit sales. Yeah, more credit sales. Manu Abraham was telling, okay.
The company will be running out of the working capital requirements to meet its day-to-day operations. So it will be in a position to take out credit also from other financial institutions, that its borrowing will also increase.
Borrowing will increase. Okay, definitely. Anything else? More credit sales, NPA, borrowing will increase, working capital problem, all those things you have said. See, if your accounts receivable is mounting up, that is a warning. That means sales is happening, but people are not paying you back. Why?
Because it is credit sales.
Credit sales, you will get it back, no? You are not giving it free, no? Sales is increasing, credit sales, I agree with it. More credit sales, yes, I agree with that. But accounts receivable is mounting. What inference can you tell about the company when accounts receivable is mounting?
The company does not have a stiff procedure in getting back.
Okay.
Fake sales,
It sales,
fake like bogus sales.
bogus sale is one reason. Yes, I agree with that. Anything else? Now, one thing you should be suspicious when the accounts receivable is mounting means companies.
Then
somebody
they are
said.
not getting back it is not recording.
It is not recording. Okay, they are not getting back. These are all straightforward reasons. Your accounting mind has made you to think out of box. In my opinion, not in my opinion, from a forensic accounting point of view, if receivables are mounting, that is the company may be manipulating the amount of sales, inflating receivables. Yes, these are. But one thing is, if the accounts receivable is mounting up, the first inference you have to make is the sales is decreasing. The sales is decreasing because the product is not moving. Why people are not paying you back means they might not have sold it. And why sales is not happening? The product is not moving. Okay. So first sign of a jump in accounts receivable, you should think that investors should evaluate that this sales is not the actual sales and the product is not moving and it is a setback towards the company if it is mounting. That is the first red flag you have to check when accounts receivable is mounting. You might have learned in ratio analysis, average days receivable, average sales, but better than that, you can calculate the DSO, that is days sales outstanding. I have given the formula there. Normally, we take opening receivables plus closing receivables like that. Like that, if you take, it will average out and the difference will not be shown properly. So here, better to take quarterly data and then you take ending receivables and divide it with revenue and into number of days in the period. That is, you have to apply approximately, that is 3 months like that. So 91.25 like that, you have to look into it. And then you have to check if there is a sharp jump in the accounts receivable. That is the first sign you are trying to find out there is something happening in the company. Then you have to go to the sales and check what is happening to the sales. Then you have to check into the stock, what is happening to the stock. You have to read the footnotes about it. You have to inquire what is happening, what is the product of the company, how it is moving. So you will have some fair idea about what is happening to the company. So first symptom is your receivables will be mounting. And if it is mounting, definitely that is a sign that sales is not moving. The product is having some problem like that. You can see several instances of this like that. So one example which is there, that is, you can see here, Another thing what you have to look is cash flow from operation and net income you should always compare. Now cash flow from operations is lagging behind net income. If net income is increasing, proportionately cash flow should also increase. And if it is not increasing in that proportion, then you have to be careful. Company is doing something. You should be suspicious at this point of time. Okay, that is the thing. So check for cash flow from operation, compare it with net income, and if it is lagging behind net income, you have to be careful. Something is happening in the company. If the accounts receivable is mounting up, then you have to be careful. Something is happening. Calculate the DSO and see what is happening in a company. One company which has been in news very recently, some of my students analyzed it, and I wanted to bring a lot of this thing because this is ILFS like that. So if you look into ILFS, they were in a fraud series of frauds like that. So if you look into the DSO of the company, I have shown the DSO of the company, day sales outstanding. That is not the ratio which you normally calculate. So forensic accountants use this ratio DSO. Now, if you look into the DSO of the company, you can see in 2020 to 2015, it was 68 in 2015, then it became 27, then it became 53, then it came to 103. By the time it almost doubled, okay, you can see from 68, then 27, then 53, then 103. By the time the fraud happened, okay, then you can see the DSO is 0, it became negative, and the fraud was detected like that. Now slowly the company, it is now 22 like that. So if you look into the pattern well enough, well in advance, you can very easily find out that there is a fraud like that. And if you look into the annual report of the company, you can see one item which I have highlighted, unbilled revenue. You can see unbilled revenue. It is mounting like that. So I have told you two things to find out. One is accounts receivable, and second one is cash flow lagging behind net income. Then you look into the contract and more amount of contract. Normally you have 2/3, 1/3 like that. You have learned all those things like that. But more income will be recorded in the current year like that. You can see most of the companies, automobile companies, they do it every time. You can see by the month end, they will try to increase their sales like that. Now, percentage of completion method, I'll tell you like that. Normally, you have learned a formula like that. From analyst point of view, what you have to do is, you have to check, say for example, the cost incurred in the project is 2 lakh. And to complete the cost, complete the project again 1 lakh is required, means how much I should put it as income in the current year, means 2 lakh divided by 1 lakh, so 20%. So, and you look into the total contract value, and 20% should be recorded as revenue. So this you have to closely check. You have to calculate it, and what should be the revenue that should be recorded, you have to check. And if the company has recorded more, reduce it, because that is not showing the true value of the company. They are misleading the investors that company is at a profit like that. So many companies are used to this percentage of accounting method. Raytheon is one company which has been using this like that. So there are many aggressive assumptions that can be used to accelerate revenue. We will look into these things like that. Now, one company which was very famous was Xerox. It got bankrupt. Now we don't see Xerox like that, but Xerox is the name. If you are here, we used to say for photocopying, we say Xerox. I want a Xerox, like that we say. So Xerox became the name for the company. Now what Xerox did is, this company started sending the equipments to all the big countries like Brazil and all like that. And they started recording it as sales. They even financed them to purchase this equipment like that. And they gave them finance at a lower rate. Suppose the bank rate is 7% interest, Xerox gave them at 5% like that. So like that, they started sending their equipments to different countries, and the company tried to increase its sales like that. And their discounting rates was very inappropriate, in the sense, as I told, that their rate was much lower than the prevalent rate in the country like that. So they used a series of transactions like that, and their sales were mounting, and the company was in its boom. Everybody knows Xerox, and even now we call Xerox only. We don't say photocopy, we say Xerox. Give me a Xerox, like that. So here it is very simple. There are two types of leases. Do you know what are these two types of leases? Anybody? There are two types of leases. Do you remember any of these lease? You have studied, no, in accounting, lessor, lessee, and all. What are the two types of leases?
Financial lease and operating lease.
Financial lease and operating lease, okay. And what is the difference between these two leases? How it is recorded? You learned a series of journal entries like
So
that.
in case of financial lease, the entire depreciation and all other charges shall be recorded in the books of lessee. Coming to operating lease, as the risk and rewards are not transferred, so the same will be recorded in the books of lessor itself, as he bears the same.
Okay. Any other information? This is how it is recorded. Now, understand what is the basic problem with the lease, operating lease and financial lease like that. Operating lease will not be shown anywhere in the books of the accounts of a company if it is an operating lease. They will simply put an amount as rent. It will come in crores of rupees. Okay. This is the amount the company has to pay over the years, but the total liability will not be mentioned anywhere in the books of accounts, and the only item which they are recording will be shown as rent. And the discount rate will be mentioned as 5%, 5.2%, 3%, like that. If a manager is reducing the discount rate from 5.2 to 5%, they can increase the revenue. So the amount that will be expensed to become reduced, because this comes in a very big amount. In today's newspaper, Reliance and what is that company? Their lease agreement, you can see that. So in today's newspaper, so this comes in crores of rupees, and nowhere in the financial reports it will be mentioned. Only one few lines will be mentioned. The rent of the lease for current year will be this much, and the discount rate is this much. And in order to find out whether there is a change in the discount rate, you have to look into the previous. If the discount rate is very high, they are aggressively expensing it like that. And the discount rate is very low, that means they are reducing their expenses through which they can increase the profit. Okay, so this is very simple technique which can be done in case of companies. They can very easily do this. A minor change is required in a discount rate number. So you have been learning all this year, lesser, lessee, how it is recorded, all those things. Like managers need only to change from 5.2 to 5 or 6.2 to 6. 1 point is changed means crores of rupees will be saved or increased like that. That is how they do it. So this is something, a simple change in the discount rate from the assets leased to the customer, depending on. From an analyst point of view, we should always consider it as a financial lease. Even if the company is doing an operating lease, you have to find out what is the total value of the asset from the notes, and then you check what will be the liability of the company, and if it is converted to financial lease, what is the obligation. All these things as a investor you should try to find out. So a simple change in the discount rate can lead to this. Xerox has done this. Okay, a simple discount rate, and they were showing a very high profit. Next, coming to the next part. So you can see Xerox has approximately 300 million they have done through this like that. Another thing is, you can see when a company is providing a service along with another service, say the now in today's newspaper it is there that Geo and Google is coming up with a phone, you will have to pay 1,900. Similarly, in most of the developed countries, if you go to buy a phone, like that phone won't cost you much. But the connection is inbuilt in that, and you cannot change the connection. Like I want a Geo, I want a BSNL, like that, you cannot change the connection. Connections comes with that, like that. So Japanese telecom provider, SoftBank, although its name is SoftBank, they are actually a telecom provider. So what they did is they combined this phone charges and this thing like that. And actually what happened is that they tried to record revenue through a multiple arrangements. So whenever you are having a multiple arrangement, that is sale of phone combined with the connection, all those things is there, then you have to be careful. I'm not telling you all these are illegal, but it is very easy to mix up things and they can try to manipulate their earnings. So this is something which happens with most of the, whenever somebody say, you can see a company is giving you a product and they are giving you the finance also. Both are different. The challenge lies in how to record it like that. In some cases, the companies have, managers have a lot of discretionary power, but some cases companies don't have much discretionary power. Say for example, a biotechnology firm. They have to put research and development R&D. If you look into the rules, accounting rules, development costs can be capitalized, but research should be expensed like that. In countries like US, the whole amount should be expensed. And biotechnology firm is a firm who is doing a lot of research. And all this should be expensed. So naturally, their profit will be less. But if you look into a bank, manager is the sole person. He can decide whether the loan should be given, whether this should be given, all those things. They have a lot of discretion there. So in some industries, there is less discretionary power. Some industries, there are more discretionary power. But some items are there which is having managers discretion always. For that, one is lease, second one is R&D, third one is pension benefits, all those things. So here normally lot of adjustments can happen. Pension and all, a small discount rate change is required. Lease also, a small discount rate change is required. You can change it to this. Again, you have learned historical cost accounting till now, but that is not in practice. That is in practice, but fair value accounting is coming. So when you look into financial assets, you have to record it as its fair value. So market value, like that. So like that, accounting is also gaining prominence, and it is changing the way we are recording like that. And it is getting very complicated in how to record it like that. Now coming to the next one, recording revenue before buyer's final acceptance of the product. Many a time what happens is that people will send it. You sent the product, but the buyer has not bought it. Sunbeam's case is a classic case. All the employees used to say that it is called parking, like that they used to say. They will send it and then they will say, okay, fine, sales, like that they will write it. Another company which did that was, we have a lot of Indian companies I have in my this thing. I will show some of those Indian companies which are doing it like that in the next session and tomorrow's session like that. But most of these are not reported in any textbooks, or our accounting textbooks are 100 years old actually. So none of them report about these things like that. So that's why I'm mostly using the foreign examples like that. Now in this, one company which is very interesting is Symbol Technologies. So what Symbol Technologies will do is, first they will send a product and they will write it as sales. And when the customer receives it, they find that the wrong product has been delivered. So they will return it back. Then they will send the correct product again. Then again they will write it as sales. This will be, and the other one will be returns, like that. So like that they try to increase it. Sometimes a beta version of the software is being sent and they try to increase the sales. So these are some of the many techniques which companies use to actually increase the revenue of the company. So first thing what you have to check is, you have to check the sales of the company. If you look into Enron, in Fortune 500 companies, Enron reached to Fortune 500 companies in just 5 years. Whereas GE took 20 years to reach it there. So if you see any company is having sales doubled, tripled, all those things, don't think that the company is doing very nicely. You have to be very skeptical that company is doing something wrong. Then you try to find out. If sales is increasing, proportionately other expenses should also increase. If sales is increasing, revenue should also increase. If revenue is increasing, cash flow should also increase. Okay. So if disproportionately these are not increasing, that is the first case of suspicion, then you have to dig out. You have come at a crime scene and you have found out a crime. Don't stop the investigation there. You are seeing a sharp jump in DSO. Okay, there is some problem there. Go deep into the notes like that. and try to find out what is happening to that. So these are some of the things, some of the techniques which companies use to record revenue too soon. So let me conclude with this thing. What techniques one can use to find out? You have to calculate DSO of a company, days sales outstanding. You should calculate DSI. You have to calculate the inventory, days sales inventory. If it is mounting up, inventory is mounting up, naturally the product is not moving, and you should be careful about this thing. Bills receivable is mounting, naturally the company's product is not moving, you have to be careful about it. So all these are some of the techniques which I am telling you to find out. Okay. Now, to conclude, these are some of the warning signs of recording revenue too soon. Recording revenue before completing any obligations under the contract. I told you how to calculate the contract profit, and if it is more than that, you should doubt there is something wrong. Recording revenue far in excess of work completed in contract, again you have to be careful about it. Upfront recognition, full amount is recognized like that. And aggressive assumptions of the lease. Recording revenue before buyer's final acceptance. Then cash flows lagging behind net income. Payment is uncertain. You can accelerate sales by changing revenue recognition policies. Appropriate accounting method for unintended purpose. Market to bill holding, that is, you bill it and you hold it like that. Then any assumptions are changed, and sellers offering generous payment, extended credit, all those things like that, you have to be careful about it. So all these techniques, you have to one by one, it takes some time to look into one by one company and try to find out. First, there is a jump like that. So first thing I have talked about one shenanigan, that is recording sales like that. Now this is individually analyzing a company is the best way to detect the fraud. And then you can find out whether there is a fraud. But over the years now new techniques have come, like Benish has come up with a score. We call it as Benish M score. And Benish M has told that if the score is above the cutoff limit, then we can assume that company has committed a fraud. Similarly, there is something called the Benford law, that numbers have some sequence and patterns, and if there is a deviation from the pattern, then there is a chance of a fraud. So these two techniques, that is Benford law and Benish M score, we will try it with the company tomorrow, and we will try to find out whether this is actually happening. Okay, so I'll help you out in doing these two things in the next class, that is tomorrow. And I'll send you a spreadsheet, so you can be a part of it. You can share your screen and I'll tell you what to do, and we will try to find out how this things happens. So I think my time is up to 11.